Good evening and welcome to our financial wellness presentation this evening. Thank you so much for taking the time out just to share with us this evening at Suffolk County Community College. My name is Verlene McClaney and I'm one of the business consultants at the EAP Center. And I just want to welcome everyone that's able to jump on the call. We're going to talk about a couple of different topics today, and it's a three-part series. We do have a chat available if you want to actually ask a question or make a comment. We do have Jay on the line, and he'll be able to go over the questions at the end of the presentation, and we'll just jump right in. All right. Again, thank you so much. And the topic for this evening's webinar is financial wellness. We will be having a series of webinars throughout the month of November, pretty much every Thursday at around the same time at 7 p.m. All right. Thank you. So again, our agenda is three parts. The first one is ways to rebuild your small business during and then after the pandemic. The second topic that we'll jump right into will also be why financial wellness, and then why now, being a resource to your employees. So if you own a business and you have employees, how you can be a resource to your staff. And the third topic is what to do when your bills are bigger than your income. Okay, part one, financial. To rebuild your financial plan from the pandemic and your business from the pandemic as well. After COVID outbreak, there was financial havoc that took place across the globe. And according to the National Federal Independence Business, on March 30th, 2020, 92% of small businesses said they suffered a negative impact due to the pandemic, and only 5% said that they did not have any effects at all. So we're going to be talking about briefly ways that you can rebuild underneath the new normal, right? This is actually the new normal, having meetings virtually, not in person. First step we want to do is assess the financial damage to find out what's going on financially within your organization. Step two is take a second look at your business plan. A lot of times we're in business and we may not have a business plan, or we haven't looked at our business plan for several years. Step three, consider whether you'll need to have any funding to recover. Step four is revamp your budget and look at what your new spending would look like. Step five is to develop a timeline to rebuild, right? Everything takes time. You should have an organized strategy on how you're going to rebuild. Step six is create a contingency plan. If in fact another crisis does take place. And step seven, we'll talk about just simple other ways to save your business during the pandemic. All right, step one is assessing your financial damage. We want to look at the hard numbers. We want to identify what's happening with your financial statements. You want to compare this year financials, against last year. So you want to compare the two of those. Look at your cash flows. Look at your profit and loss statements. Did you have to lay off any staff? Again, you might need to factor that in when you're rebuilding, that you have to have new staff or new employees and new salaries. Put in a budget, right? Look at ways that you're going to market your business and also to advertise. So you might need to look at some cuts there. And then, of course, customers. Some of your customers may have, moved or migrated towards your competitors. So you need to look at some financial damage that might have occurred. Step number two, take a second look at your business plan. So that, I think, is a very important step. One of the things we do, and we help clients at the Suffolk County Entrepreneur Center, is sit down and develop business plans or help you revamp your business plan. So we are available to do so. One, fine-tuning that business plan that might be in existence already. How to adjust to the new normal. Again, some of the things that most companies had to do is go virtual, right? Go live. Everything has to be safe and sound and electronic at this particular time. Go digital to expand your offerings. Partner with us, obviously, EAC remotely. We have still our business consultants, like myself, and we do mentor staff, or we mentor small businesses through the online platform, whether it's Zoom or GoToMeeting. And we have the free webinars that we're offering pretty much on a quarterly basis, but every month, every day this month or upcoming month in November, every Thursday. Evaluate your strengths and your weaknesses, right? Revise that, look at again what your sales goals would look like under the new norm. Evaluate the circumstances that you're under right now and what it may look like in the future. Step 3 is to consider whether you'll need funding. And this is a step that a lot of small business owners were faced with last year and still faced with this year. There are several SBA programs that still do exist. Some were closed, some were reopened, but there are avenues that are there for a company that's reporting their taxes and that could show a deficit during the months of March in 2020. So the SBA PPP loan and the restaurant revitalization are currently closed. The pandemic recovery grant is available. The restaurant resilience and the shuttered venue operations grant is open. And the EIDL, right? That's also to another grant that's still open. Consider other resources that you might have that's available. The traditional microloans, right? For small businesses, maybe a line of credit for your business or a credit card, a business credit card to help you along the way. You might build relationships and have receivables from certain merchants that you use or cash advances from those merchants. And you might have inventory financing or equipment financing. Step 4, revamp your budget and account for the new spending, right? You have to sometime again make money or spend money before you can actually make money in this situation. Funds for hiring and then training your new staff. That may be something to look at, that people you had to lay off, you need to retrain them and get them up to speed to the new norm. Inventory purchases. You might need to revamp your inventory, and that is another part, a big part of your budget. You might rev up your advertising, right? Put a new buzz around the opening of your business or reopening of your business, something exciting and creative, something really innovative to express who you are now under the new norm. Eliminate some monetary waste by just maybe looking at your operating expenses and the costs that are associated with operating your business, and deferring maybe paying yourself. So that one might be really hard to do, but as a business owner or an entrepreneur, that might be a decision you make. Instead of laying off staff members, you either lower your income or stop the pay for your salary for a couple of months. Step 5, basically develop a timeline for rebuilding. So everything is not going to happen overnight. So we're still a year and a half into this pandemic, almost 2 years. And you cannot do everything at once, and then you cannot do everything by yourself. So we would urge you just to have a timeline that you can prioritize what's most important first, maybe for the first quarter of the year. Now we're looking at the end of this year. There's only like 60 days left to 2021. So now we're looking at planning for 2022. Track your progress, right? So we have these steps, we prioritize it, we have a timeline. You want to track your progress. What are you doing well? What has been accomplished already? Just keep crossing things off of your checklist. Check in weekly to see again what's working and what's not, right? You want to have a plan and a strategy, but you want to also see after you implement the plan that you can revisit it and see what's working and what's not. Shift from reviewing your business financial statements, maybe, from a quarterly basis to a monthly basis, to stay on top of things. Meet with your accountant and engage with him or her more often than just during tax season. And number 6 is to create a contingency plan, because another crisis might be shortly on the way. It doesn't have to be a pandemic. It could be any crisis in business that has a financial crisis for your business or an impact that way. Be prepared for the next crisis. Help to insulate your business basically for the future. Build a liquid cash savings. One of the most important items for individual as well as a business, having that emergency slush fund. Help your staff work more efficiently by cutting some operating costs as well. Adapt to keeping your business more fluid. to weather the storm in the future, whatever that might mean. Having staff work remotely as we are right now, maybe even have staff work in different hours, different shifts, be flexible with that. Think outside of the box, right, to prepare for the worst and then, of course, for the best. Have a plan B, a C, D, E, and then even an F to help improve your odds for surviving, right? So if we just had one contingency plan and we're going through COVID and 12 months go by and we're still closed, we still need to look at a second contingency plan as well. And then step 7 or item 7, some other ways that you can save your business during the pandemic or just in general at this particular time. Use your relationships. I think this is very important that you partner with a center like the Entrepreneur Center, the Chamber of Commerce, right? You might tap into some resources there and network with other small business owners like yourself that are pretty much experiencing the same thing, if not similar than what you're experiencing. Expand your business hours, as I mentioned, to be very flexible for your staff and then for the customers that you're servicing. Maybe be open 24 hours. So you have a shift that's working during the day and a shift that's working during the night. If you have young children, you might be working at nighttime. Keep your workplace as clean as possible, right? So if someone or if your staff is going in, you might hire, of course, a cleaning staff during the pandemic to make sure that your staff is safe. That would prevent them from being out sick and, again, getting ill during this pandemic. Accommodating your customers, right, for their needs to connect. People feel really isolated during this time, whether you're moving around out and about, you're wearing your mask and you're still being safe. People still feel very isolated. So they tend to talk on the phone and want to talk on the phone a little longer. So you might hire a phone staff just to kind of accommodate your customers and, tend to their needs on the phone. Maybe it's walking them through the process on how to process an online transaction or an online order. Look for opportunities to help within your community, right? There's several different ways to help to deliver, whether it's supplies, food, and other things that you can help out to do during the pandemic or even after the pandemic is over with. Educate and engage your customer, right? That's something very, very important as well, to stay with them. Maybe have a Facebook Live presentation that you're talking about your products and your services or how you're better able to service them during the pandemic or what safety precautions you now have in place to accommodate some of your customers' needs during the pandemic. And then, of course, again, number 7, to utilize technology, right? Technology is always on our side. You might use texting, Facebook, Messenger. You might also use FaceTime to address some of your customer needs, right? So you can see them face to face, you do a Zoom call or go to meeting, discuss some of their challenges if they're not able to come into your office or come into your place of business. Okay, part 2, wellness, financial wellness. Okay, are you a trusted source of information for your employees? So this is to all the business owners that have staff. 25, 29, 47, and 61, right? These are the.
Verlene, you muted.
Okay, so, thank you. So I'm not sure if you were able to hear anything that I said, but I'll start from this point. Why financial wellness and why now? 24% of the employees report basically that they have issues with their personal finances, and that's been a distraction at work. 29% of the defined contribution participants report missing work, basically dealing with the stress of their finances. 47% of defined contribution participants strongly agree and they find themselves living from paycheck to paycheck. 61% of the workers lack the savings or some type of cushion, which we should have at least 3 months of our monthly expenses in some type of emergency cushion. Okay. And hold on. Okay. The US, of course, is one of the most richest countries in the world, yet Americans still live paycheck to paycheck. Retirement accounts are very low. Emergency savings often don't even exist for most people. Financial stress usually hinders people or entrepreneurs and their employees from engagement and also too for absenteeism. Creating a financial strategy and a financial wellness for your staff is one of the ways that you can actually overcome some of these challenges. First thing you want to do, a first step is to understand the financial landscape of who's working for you, right? What's their economics, what's going on with them in their personal life. We know that there's nothing static in this lifetime. So everything is constantly moving and changing about the finances of your employees. Aim to meet those employees just where they are, maybe varying situations where some of the staff have emergency savings, some don't even have bank accounts, some of them have investments. So you want to meet each and every staff member where they are. So have a financial wellness program that can address everyone at every level. We want also to define what your financial wellness program at your job may look like, your place of employment. Pretty much to depend on not just your income. Financial wellness can be just about debt management, about investing, about retirement, college planning. It can mean a lot of different things to the staff that you actually, hire. Again, meet people right where they are, whether they're struggling with their income, their spending habits, their budget, their credit, extra income, or just feeling financially secure. Some of the best practices, again, is to evaluate all of the individuals that you're actually employed, all of your employees rather. Have a system that's set up automatically, maybe like an automatic savings plan that they can establish in the bank. Build some relationships with your banker or your local banker where your staff can actually have some discounts to open up bank accounts with them. Keep the savings plans going and fluid. Explore establishing an emergency cushion as well. Look at some of the well-established business or wellness plans that exist, and then be really creative. Maybe there's a creative way that you can establish a wellness plan within your organization. Build a case for yourself, and this is proven obviously with other impactful businesses. Employers save $1 to $3 for every dollar spent on a financial wellness program. Some of the achieved results are decreased absenteeism. Like I said, people are not absent or out of work because of financial stress. Increased productivity. Increase the usage of retirement plans and other financial plans that you might have at work, savings and investment plans throughout the employee payroll deductions. Okay, financial wellness part 3. What to do when your bills are higher than your income. All right, and I'm not sure, there's a couple of different questions or comments within the chat, and we'll probably try to address those a little bit later. The first thing is to remember the waterfall. And the question here is the buckets, which bucket to fill, whether it's my emergency savings bucket, my retirement savings bucket, or my taxable investment bucket. So you have 3 separate buckets, and you should have 3 separate buckets that you can really pull from money underneath a financial crisis. Before, spilling over to one bucket, you want to make sure, again, first your emergency savings is depleted, and then you might tap into your taxable and or your retirement plans. All right. So again, what to do? Remember the waterfall. Kill first your higher interest rate debt. So you want to look at and list all of your credit card debts or all of your debt that you might have, loans. Look at the interest and the terms on those loans. So the highest you want to try to attack first in the waterfall process. And then once you've gone from the highest interest rate, you go down to the lowest. So you might have a credit card or loan that's at 18% interest, and then another at 10, and another maybe at 7 or 8%. Then you continue to go down the waterfall. So the highest first. Build an emergency cushion for yourself. So again, most Americans, as I say, live paycheck to paycheck. Try to squeeze out, even if it's just $25 a month. That will build $300 a year until potentially you have enough to have a 3-month stash of your monthly expenses. Contribute to a pension plan or a retirement plan. If your employer is so very small, they don't offer those benefits, you can still do an individual retirement account or an IRA, whether it's a Roth IRA, tax-free, or a pre-taxed IRA. You still can build your own retirement wealth. Pay down the low interest debt. Of course, we're starting high and then we go down to the lowest, and set up a flexible investment plan as well, a taxable one. All right. What to do if you lost your job, right? Or other sources of income. So right now during a pandemic and, coming out of the pandemic, you may have lost one job or a consulting position that you had, or, independently, some other streams of income have slowed down or stopped. Again, spend first your emergency fund. Turn off any investments if you're investing now into your 401k or your emergency savings account. Stop the new flow into those accounts for the meantime. Stay away from potentially any more personal debt. So if you can avoid loans or credit cards using them, then please, that's the wisest way to go. Selling investments, that will be your taxable investments first, because there are no penalties associated with them. And then as a last resort, you would tap into some of your larger resources, which might be, of course, your retirement benefit. And they sometimes normally have huge benefits or huge penalties associated with it. Unlike normal, the CARES Act in 2020 did give a lot of exemptions and a lot of exceptions if you were taking money out of your retirement plans. That mandatory 20% was waived during that time. You were not even hit with the extra 10% if you're under age 59 and a half and you were taking money out of your retirement accounts. Also, too, underneath the retirement accounts, if you were going to be paying back a loan, taking out money, you had a 3-year time frame to pay back the loan and spread those income taxes over 3 years if you were taking out money from your accounts. You're also able to do, and this was from January 1st, 2020 to December 31st, 2020, taking out $100,000 or 100% of your vested balance in your retirement accounts and pay that over 5 years with no taxes. And then loans, if you had loans on a 401k prior to March 27, 2020, you can delay those loans up to 1 year before repaying them. All right. However, you still would have interest that's being accrued. So for most cases, if people were spreading their tax liabilities under the CARES Act for 3 years, that was for 2020, 2021, and 2022, that would be phasing out after next year. Okay, what to do again if you lose some of your income? Next step is to triage your bills, right? Sort them in the degree of urgency. First, of course, your bill, you might be looking at, again, those high interest debt. You may also be looking at your mortgage, one of the biggest resources, or your rent. Contacting your landlord, being able to communicate with someone and tell them what's going on, that you're affected by it. Some essential workers were not affected, and some people were not affected, and some people increased income and wealth during the pandemic. However, if it was a negative impact for you, you can speak to your landlord, speak to the mortgage company and your utility companies as well. Contact them and let them know what's going on and how you can delay some of those bills and paying some of those bills. For the most part, mortgage companies are really very flexible and still working with people in this situation. Debt, of course, that's the last resort. We want to try to avoid it if necessary, but you might need it to survive, right? You might need to use your credit cards. You might need to, borrow money or take a loan out to do so. So you want to do it as smart as possible. If you have any balance transfer offers that have no interest or very, very low interest for an introductory period, 6 months, 8 months, a year, you might want to tap into those resources. And then, of course, if it has a low interest rate. Okay, when things start to turn around, so after your financial situation starts to improve, we want to get that waterfall moving in the right direction again. What do I mean by that? We want to establish that emergency savings and start putting money in your emergency bucket. We want to resume your retirement plan savings. We want to start putting money into your IRAs or putting money back in your 401ks or not-for-profit 403b. And then we want to have investable assets outside of retirement and outside of your emergency savings. Again, we want to have a bucket of money to pull from in all situations and making sure we're staying in a positive mode when we're looking at the waterfall. Okay, and that is it for tonight as far as our conversation. I do want to take the time, I think Jen is on the call maybe at this point, to review the chat and perhaps answer some questions that might be out here. I apologize that this is not a seminar where it's more interactive, but we will be able to answer some of the questions. Jennifer, are you on the call still?
Yes, I am, but I'm not seeing any questions in the chat. Maybe if anybody has any specific financial questions for you, if they have the ability to unmute, they can ask you or raise their hand. If not, they can put it in the chat and we can read that out for you.
Okay, so I'm just trying to see if I see anything here. Okay, so that was just a message for everyone to put their name in the chat. If there's anyone in my class that's here. We have two. Okay, so how much should you have? I'm sorry. So how much should we have in our emergency savings fund? That's a very good question. Thank you for asking that question. We should have, or we should aim for 3 months of our monthly expenses in that emergency cushion account or that emergency fund. We should, again, shoot for that. Initially, if you have nothing, we can certainly go for the first month, maybe in 1 year, and then year 2, go for the next month, and then in the third year, go for another month. So let's say, for example, your monthly expenses are $1,000. The first year, you can save $83 a month until you get to 1,000. The next year, you do the same, then you get to 2,000, and then year 3, you get to 3,000, so that you can build up your emergency savings. You don't have to do it all at once. You could do it over time. Thank you for that question. And let's just see if we have any other questions. Okay. I see one about, excuse me, I don't have my glasses on. What are the investment limits for your IRAs? So if you're investing in an IRA right now and you're under age 50, 6,000 is the limit. If you're over age 50, you can put up to $7,000 a year in an IRA. That can be pre-taxed or after tax. There are income limits if you are individual and file individually, or you file head of household, or if you file jointly. There are certain income limits where you can talk to your tax professional to figure out if you're eligible to get a tax deduction or not for your IRA. But those are the limits at this time. And you can also, with your 401k, you can invest up to $19,500. If you are a small business owner, you can do a single 401k. So just as you're working for a large corporation, you can also set up your own single 401k or solo 401k and have a deduction on your income taxes up to $19,500. Thank you for that second question. I see a question that says, any resources for anyone starting a new business during these times? Well, that's a great question. So there are a lot of different programs that you can see or look into through SBA. The information that I was sharing a little earlier is for a business that's already in existence, some of the SBA funding and grants that are available. But it depends on your small business and what type of small business it is. There are different grants and different opportunities for women. If it's a women business owner, I'm not sure the person that's asking the question, is it for a woman, a business owner, or a minority? You can be minority certified and you can go for certain grants depending on, again, how long you've been in business and how long you've been in that industry. So there are some resources available. You can certainly, and I'm going to see if I can put my information in the chat, that you can contact me to have a one-on-one, consult to talk more about your situation privately, on what resources you may need, depending on that. If you have your business plan already and you pretty much already know what you need to get started, or if you need to kind of take those necessary steps in establishing the business plan and requesting funding within that business plan. Let me just see if I can put the chat in here. Again, my name is Verlene McClaney, and I'm going to give you my home office number at this time, just because I'm actually still working from home due to the pandemic. But the number is 516-884-3908. You can call that number. That is a landline, not designated for texting, but 516-884-3908. And let's just see. You're welcome. Let's see. Any other questions in the chat? I don't know if you see any others, Jennifer.
I'm looking, I'm keeping an eye on them to see what's coming in.
Okay, thank you. Okay, well, if I don't see any new ones, I don't see any others. Would you like to announce the upcoming workshops? I don't have the list in front of me. Jennifer, what's up for the next week, next Thursday?
Yes, so actually next Thursday, we are having our speed business mentoring event where we will have a panel of successful business owners who have been able to keep their business open throughout the pandemic, and they're going to give you their strategies on how they've been able to stay successful during the pandemic and even beforehand. And the week after that, we will be having, I'm sorry? The week after that, we will be having our MWBE presentation with panelists who are minority and women-owned certified businesses with New York State. So they're going to tell you about the process of getting certified, the hardships they've had, and what successes they've been able to have becoming certified, with getting contracts and such. If anybody was on Tuesday's presentation, Art of Storytelling, we will be having our second presentation next Tuesday from 7 to 9:30, where business owners, or even if you're thinking about starting a business, will really create your story that you will be sharing to increase the value of your products and your service for consumers.
Okay, thank you so much. I know someone jumped on a little late, wanting to know, is there a transcript for the presentation? So we are recording the presentation, and it should be on Facebook as well as our YouTube channel. So that should be available after this evening. Thank you for that comment, and thank you for joining us, even if it's late. We do appreciate your time and you coming on board. Any other questions? Let's see, or comments?
As well as our Facebook information.
Thank you for that. Thank you for that comment. All right, well, if there's no other questions, I don't want to hold anyone up tonight. I do thank everyone for attending, and definitely stay tuned for next week with the speed networking. It should be really, really exciting. There's another one. Okay. All right, I think that was it. So I think that's all for tonight. Just wanted to again thank you all and have a great night. Okay, look forward to seeing you real soon.